One of the things that I've been doing in recent times is trying to get my mind over the investment community in startups, technology, financial technology called fintech and so on, and the emerging culture and the people driving the investments and the selection of winners and losers in the evolution of the financial services industry. And someone who's really, at the head of his game globally, and who I consider a very good friend now, is Vladislav Solodkiy, also known as Slava. And we've been tracing you over time in terms of the investments that you've been. Yeah, and very intrigued about the way in which you have been making decisions, sometimes a little bit ahead of your curve, because you are the original investor in mobile-only technology, mobile-only banking, and stuff like that, and that's evolving as we go along. And very pleased to see your latest book, The First Fintech Bank's Arival, and we'd like to be able to talk about that. And this is my first formal interview with you, despite having met with you several times now. Maybe we should start, Slava, by just going back a little bit and tracing your own journey into the investment world. What were you doing originally, and how did you find yourself in the investment world? And bring us to the point where you've made the point at which you became successful, or rather, you proved that you were a good fund manager or a good investor in that way, and then the rest of the story took off from there.
Oh, sure. First of all, thank you so much for the invitation to be here. It's really honor for me to talk with you, because, as you know, I always appreciate what the Asian banker is doing and what you personally promoting, what kind of ideas, concerns, challenges you are honestly trying to articulate with your audience. Regarding my journey, it's not so typical story for venture capital guys, because I used to work in marketing and PR, so I have never been invested before in any company. I'm not a financial guy in terms of my background. About 6 or 7 years ago, I started to be interested just as a person in fintech, financial innovation. This word didn't exist at that time, and I started to visit conferences, to meet with people, because this market was very small, and it was so easy to be connected with everybody, because it wasn't so much attention for this topic, for these people. All companies were very small, and nobody ever cared about are you investor or banker. Everybody just passion that, oh, this guy wants to ask us something regarding what we are doing. And after 2 years of my own homework, my own research regarding via visiting different conferences across the world and meeting with people, I met some guys, ex-bankers with some money in their pockets, and we sat together many times, and I just described them, not to ask to invest into me, even it wasn't my idea to create my fund. And one of these guys, he asked me, why you are not thinking about to create your own fintech fund, fintech focused fund? And I answered, come on, it's a crazy idea, I'm not investor guy. But he answered that if it will be the first fintech only fund, so everybody who is doing something first time, I mean, it's not necessary to have an experience, because nobody did it before. And after that, I met Igor Pesin. He is also partner of Life3, and he came from private equity side. He is genius in terms of business model, financial analysis, etc. We joined together. These guys invested first $40 million in our first fund, Life3 the One, and we created this fund 5 years ago. Mostly we invested in US, UK, Germany, a little bit Russia and Ukraine. We invested in 13 companies, already exited from 7, so it's great traction for
How big was that fund originally, and why was it called Live Trader? Like,
Srida, it's a very funny word in Russian. It means ecosystem, environment, society, and Wednesday. And I prefer the meaning ecosystem, but finally we decided not to translate it because we prefer this many meanings. Even in Russia, we had several funny situations when somebody came to us on Wednesday because they forget that this is the name of the fund, not the date when we have to meet.
okay. Oh, okay.
And but we prefer ecosystem meaning. And it was quite small fund, first fund $40 million, but you have to understand that the industry was also
Smaller
not so big as today.
Right.
And we invested in 13 companies, already exited from 7. Most of our first investments, they are quite iconic for fintech industry, like Simple Bank sold for Spanish banking group BBVA, Moving Bank sold a secondary deal, and Famous Group, it is the biggest and best fintech fund in the UK. It was our fund-to-fund investment. SumUp, it is European Square. German online bank Feeder sold last year to French banking group BPC. Rocket Bank, it's Simple Bank in Russia, sold for Open Bank. And our investments, they provided us brand recognitions, success and money, but the biggest value from this deal that this investment, they were quite iconic as brands, especially Simple, like everybody even right now when doing some neobank or challenger bank, they are pitching themselves as we are doing Simple Bank for some country or for some industry or vertical, etc. And since the beginning we are also publishing our report, Manual the Future report, covering fintech, insurtech, and blockchain. Always many people asking me why you are not selling this report for 1,000, 2,000 US dollar, but we always answering that it is the easiest channel for us to be well known through this industry, because most of startups, funds, banks, they know us through these reports. And the second one that when you are trying to inspire some new entrepreneurs which will create their fintech or insurtech or blockchain solution tomorrow, so and they will come back to you and ask not just your money but your opinion, your thoughts, your vision, what you can suggest them. So this value for me is even higher than money on current account. And it's provided from our report since the beginning of our... We have more than 50,000 downloads of each chapter, mostly from US, UK, Germany. Right now, Asian countries started to download it faster than others. About 3 years ago, we relocated from Moscow to Singapore because 3.5 or 4 years ago we saw that Asian region started to grow faster than other regions. We tried to make several deals remotely. It doesn't work because always people answered us, when you will be here, let's meet. Yeah. And the second problem that when you are talking, for example, with some founder via Skype from France or Germany or Italy, you understand about what they're talking faster because you already encountered with such problems before. But when you are talking with some fintech founders from Thailand or Myanmar or Indonesia, very often you cannot understand what kind of problem they are trying to solve. So you have to meet first the end users, ordinary people from the street, and to ask them what is the biggest pain for you in terms of financial services right now, and only after that you will understand why these guys decided to solve this problem or demand via that way.
Right. So by the time you moved from Moscow to Singapore, how big were you in terms of your fund size? Still 40 million? Or
Yeah, at that moment we totally deployed our first fund and we established our second fund, Life 3D2, focusing on Asia, targeting for 100 mil. We already started to invest from this fund, but we are still raising a little bit to achieve our...
Where are you now for that with that fund right now?
We are still looking for 30 mil.
Okay, so with that kind of numbers, you're able to create the brand, the credibility in fintech at the moment, and with that you get all of the opportunities. You get into the door of both the potential investors as well as the ideas that are being generated. Is that where fintech is right now in terms of the deployable fund size and the opportunities that are coming out, the kind of funding that they're looking for, or is it scaling up? Is it growing? Is there a growing difference between the big ones and the small ones?
Right now, fintech changed. During the last 2 years, changed not 100%, but very much. First reason. Asia became #1 region in terms of investment which came to the industry. So previously US dominated in this world, still dominating in terms of new ideas and new technologies, but in terms of real value for many people, especially for unbanked people, in terms of numbers of transactions, in terms of how you are changing lives of these people, Asia became #1 region and growing much faster than other regions. And
but if you took the China number out, is that true too?
Yeah. You have to, to be honest, if you will be honest, you have to talk about China, not about Asia. In Asia, everybody prefer to title whole articles that Asia became #1 region, but we have to talk about China because more than 80% of whole money belongs to China.
And that's a whole ecosystem by itself. Are you playing in that at all? Are you invested into anything in China at the moment?
No, China it's very hard to play.
It's a self-sufficient ecosystem, right? It's very much Chinese money in that.
Yes, but right now they encountered. Their company, even such giants like Alipay, we're always in touch with them with different their offices in China, in Singapore, in London, and these companies like Alipay or WeChat Pay, they became so big inside China, they have to go overseas, and they encountered with some problems with scaling, and because you cannot just replicate your technologies, your interfaces, your business model to other regions, and I think scaling it is the biggest problem right now for Asia itself. And you asked me previously regarding how fintech world changed during last time. Mm-hmm. So first of all, this shift of regions which dominate in this industry, and second step of this evolution belonged to if previously fintech attracted mostly whole resources for new startups. Right now, most of activities belongs to already existing companies. Market became quite mature. There are more than 5,000 fintechs across the world, more than 550 insurtechs across the world, more than 400 blockchain startups. I'm excluding ICO-backed startups. I'm talking about just pure blockchain startups, and fintech presenting 24 verticals of services, which are covering by these players, and this industry became enough attracted in terms of talents, in terms of money, and right now. Why, for example, I'm talking about next step of evolution in fintech industry belongs to creation of fintech banks. One of the reason is about that right now industry have to consolidate resources. I mean, customers already a little bit tired to use only 1, 2, 3 services from this even successful company. They want to replicate, to rebundle, to replace whole traditional services which provided by traditional player, and they're asking from these fintech players, are you able not just to provide us toothbrush or to stick, I mean, only one service, are you able to provide us for us whole bundle? And the second one, these companies, even like Alipay, they have to scale to other countries. They cannot do it everywhere in terms of geography and in terms of product line by themselves, and they have to buy these companies or to invest into them or to be partnered with them. So answering to your question right now, with fintech industry, we see that most activities happening with currently existing mid-size or big-size players, whole news belongs not for new startups. Even when some founders, young talents, asking me what you can suggest for us regarding what we can do in fintech, I am always answering them, it's better to think about currently existing fintech players, what they are looking for from their side, and to do some complementary stuff for them, not to try to create some new stuff.
You're probably one of the few fintech investors who seem to have to start with a mental picture of where the industry is going, rather than spray across different initiatives and so on. And you're a big proponent of this idea of a bank as a service platform, right? Is that what fintech bank is?
Yeah, one of the elements of fintech.
And in your first fund, you were invested in a number of initiatives. The funny thing is that players like Moven, in the end, the proof of concept was designed to be plugged into an existing bank. It's actually an origination story. It's not banking. It's the front end of banking, basically. Do you have a end game in mind, which is the ultimate successful future bank is?
Good question. First of all, it's something which is created in mobile first mindset. It sounds very stupid and simple, but it's very important to understand, because I always meeting many bankers, not so many as you are, but still many of them, and sometimes they are trying to explain that for sure we see all of these new fancy things, we are trying to copy it, to replicate this fancy design, user interface, etc. But finally, when I'm asking them, can I download your bank from Apple Store or Google Play and to start to use it immediately? No, you cannot. You have to go to our branches to sign many papers. After that, ask us to give you permission to use our mobile app, and after that you will. And it is an answer that you can do a lot of stuff with technologies. It's very good proverb to spend a lot of money for technology doesn't mean that you're a technology company. And you can hire many people, open innovation labs, copy as fast as you can any fintech solution on the market. But finally, if you are still branch oriented, it doesn't work. And the second one is about education, because why we see that fintech growing in Asia faster than previously in US or especially in Europe, because there it was solutions for hipsters and geeks. It was just, you have good quality services from your traditional banks, and we are just providing you additional better services from fintechs. But in Asia, fintech is just for somebody who are using cash right now. They are not.
Goes back to basic, right? Goes back to real need. A real need. You're actually fulfilling a real need. Actually, in the U.S., a lot of well, I don't know if you consider peer-to-peer players as being fintech, but really they were providing an alternative financing platform to traditional banking. So if you look at their balance sheet, it's really higher risk, a higher profit than the risk that the banks would take on, and then sometimes they even sell the portfolio back to the banks and so on. And then when you look at the UK and Europe now with PSD2 and open banking in the UK. It's, as you say, the hipsters. It actually they seem to do well on origination. The hipsters and the, what do you call them? Gifts. Yeah. So and all that works well, but there's not enough of that community in many parts of Asia, and the real need in Asia is really going down to the ground and getting the unbanked onto the platforms, right?
Yeah, and playing with unbanked, it's not just how to deliver them this product, it's how to educate them, how to use
educate them. Okay, so the second point is education. Keep going, yeah.
Third one is about very often, especially traditional bankers, thinking about fintech like how to decrease the expenses for distribution or customer acquisition. But fintech, it's not about how to spend less. Fintech, it's about how to earn more. And second one is about user experience. And I prefer to compare this evolution step with creation of Tesla, electric car. Tesla is not the first electric car in the world, but Tesla, it is first example when owner of the company decided that it's not enough for the customer just to own even the best electric car in the world, but customer have to use whole
the lifestyle,
the whole ecosystem around
maintenance, around servicing,
electric chargers, new type of insurance, new type of distribution,
lifestyle, and everything is done on the app. So it's
even how to manage your car via tablet without any buttons and other
if it is digital, it's wholly digital. It's not replicating analog on digital, right?
Yeah. And when Tesla selling their electric cars, they are not talking about that it's cheaper or not in comparison with traditional cars. I mean, it's not
just a different proposition.
Yeah, it's a different idea. Life cycle around you.
So that's why when I looked at the DBS investor presentation recently, the Singapore DBS Bank's investor presentation, and they were trying to convince, and they actually did because the share price went up after that, convinced that they were a truly digital bank. And this was our digital journey. And there were 4 presentations, one by the CEO, the other by the CFO, the third by the CTO, Chief Technology Officer, and the fourth by their India startup, basically, to say how they're scaling. And if you look at the CFO's entire presentation, it was all about cost savings. And it was cost savings for the shareholder. It wasn't cost saving. It wasn't an Amazon story where you pass the cost savings back to the customer and destroy the institution. So you see that this story is replicated around the world by traditional banks everywhere, which is, we are a digital bank and you should reward us for it because we're doing this, and this. We are redeploying our employees. We're making entrepreneurs out of them. This is how we are, generating ideas from within the institution and all that. But man, they're doing everything to safeguard the institution. And it's nothing really about the customer. It's almost like going to Changi Airport Terminal 4 and being told that being told that we are now completely digital and the process is still the same, that you have a check-in counter and you've got huge check-in counters which used to be manned and now is automated. You still have the immigration clearance, you still have the security clearance, you still have the 5 steps before you board the plane, hasn't been changed at all. And when you think about it, a future airport is one where you don't have a check-in counter, where your check-in counter is your mobile phone, and suddenly you wipe out that whole experience, and suddenly the airport looks different, and that's why your Tesla analogy is interesting, because it wasn't taking out the machine and putting in an electric machine in there. It was the whole lifestyle. The whole idea of owning a car is different, right down to the fact that you probably don't even need to own it because your car is self-driving itself somewhere on the street, right? So
your comparison is really very, very interesting and very important for understanding, because first of all, when you are listening, even fintech styled pitches from traditional banks, finally they're articulating these ideas for their shareholders, how they want to earn more and more money for them, and very few points regarding customer needs. But if you will listen any fintech, insurtech, blockchain player, 99% of their pitches belongs to their customers. This is what important for our customers. This is pain points of their customer journey. This is how we want to change it. Sometimes they do not know how to monetize it today, but as, for example, Yuri Miller from the DST told, attention, it is the most expensive thing today, not money. If you are able to attract attention, if you are able to attract customers and to serve their demand, this is the most expensive thing. Finally, you will find how to monetize it. But banks really still thinking about. And a second point belongs to why it's happening. It's not because they're stupid or do not understand something, or but this problem very described in the book, one of my favorite books, Innovator's Dilemma by Clayton Christensen. Yes. He analyzed 12 industries for the last 20 years, and he found why all of very effective, very rich, very successful companies, it is so hard for them to be innovative after several years of leadership. Because first of all, you have lack of motivation. If you already rich enough, what kind of passion will push you to take a risk, to try new stuff? It's always useful to be hungry, to take a risk. Second one is about finally be advised for all big companies, especially for extremely successful companies. If you want to disrupt yourself, do not try to innovate inside your bank or your company or any other industry, because as you just explained, it will sound like right words, but with wrong roots, because you will always think in terms of current processes, just how to make them better than before, how to save money, how to earn more. But it's not. He finally advised that if you want to really not just to add new features, but to create something extremely new, you have to do it from scratch. And the best example is Apple. When Steve Jobs came back second time to Apple, he understood that current business of Apple, it is play with some end which will happen soon, but it's still cash cow. And he finally hired Johnny Ive and to establish new Apple in parallel. He didn't try to replace current processes or products or to change mindset of current employees. He finally provided opportunity for new guys with new titles, with new goals, new KPIs to do their experiments. And right now we know Apple, which created by Johnny Ive. We do not remember even what previous team
Yes.
did for previous decade.
Yes. So in your own evolution, the institutions that you are, call them institutions, but in the startups that you are investing in, you've moved away from the Movens of the world. You're now looking for fintech banks. Tell me a little bit about what you used to be investing in, how you exited them, and what are you investing in now? What are you looking for now?
It's a very complex question because it is the reason why my answer will be maybe a little bit longer than you are expecting. First of all, we did some useful stuff with neobanks before. As I mentioned, we invested into Simple, Movin, Feeder, Rocket Bank, Instabank. So we invested, we exited, we know how it works, why customers need this solution, how it could be done better, because I mean it's not final destination. It's always attempt to create something new, how to sell it finally, and based on which KPIs and metrics. But if we will analyze previous generation and current generation of neobanks and challenger banks, it's mostly about mobile app linked to your card, and you can manage your current account.
The rails are still the old rails.
Yeah, but
call them rails, but
yeah, but no one across these neobanks or challenger banks, even new one like Monzo or Atom or Tandem, they're not covering whole loop of fintech services. And first reason, what is the difference between fintech bank concept and neobank or challenger bank concept? That fintech bank, it's about how to create whole loop, whole ecosystem of services around the customer and to deliver it. Second one is about previously most of fintechs were they existed in terms of we want to do something new, we want to be successful, and we want to be sold for traditional bank. And finally, it's provided for all of them some conflict of interest, because after that, some very big old body trying to implement some new solution, it will be conflict of technologies, because new technologies will be plugged into old backends. So sometimes, or often, it works not so well as everybody expected from both sides. The bigger problem is conflict of corporate cultures. These young guys with jeans and t-shirts, they're going to traditional bank after acquisition, and right now they have to be
they can be part of the hierarchy,
yeah,
they've got to be reporting structure, they've got to second guess their bosses, all that stuff, right?
They have to think more about the annual bonuses and the shareholders rather than about their customers and how to solve their problems, etc. But vice versa, fintechs right now became big enough, I mean, in terms of valuation, in terms of customer bases, in terms of numbers of transactions, and also, as I mentioned before, they're covering whole 24 verticals of potential needs of their customers. And right now, it's possible not to sell each leader to traditional banks as it's happened before. Right now, it's able to combine these companies, and this possible bigger company will be able to cover whole needs. Second one, it will be big enough company to stay as independent, standalone organization, not to be sold as unprofitable company for profitable bank. And third one, as I mentioned before, it's about user experience linked to ecosystem around the customer. And fourth one belongs to scaling, because all banks existing in terms of geographical borders.
So what I want to ask you there, and this is a question that's never been asked before, which really needs to be asked, what about the products? Because the traditional banker listening to what you're saying, scaling, cross-border, acquisition, customer experience, all that stuff, is looking at his balance sheet and saying, I'm still a mortgage bank. I still compete with the three other banks in town on mortgage rates. At the end of the day, I can bring all this customer experience in town, but into the equation. But the customer who walks into my branch or looks at my app is asking for the best rate. And that's where I have to win the customer. If I don't, I might as well not be a bank. And the risk profile. Now, in different countries, the prospect for new customers, just acquiring new customers in itself is a business model, which is, instead of 500,000 customers, you now have 4 million customers. That's amazing. So that's a no-brainer. But in most countries, it's about already having 4 million customers, and your competitor bank has 3.5 million customers, and both of you are competing against each other on price, and that hasn't gone away yet. And if you look at all the different product sets, okay, and here's an interesting entry point for you, which is the current account the core product, the linchpin product, or is it credit cards? And of these products, what is the technology proposition? The thing is that Amazon made it, revolutionize book industry by firstly, destroying the price model, and secondly, destroying the customer experience model, in that the customer now no longer needs to go to bookstore. He sees the entire inventory online. And thirdly, passing that profit back to the customer, and saying that we will be unprofitable for a while until we get the whole supply chain thing through, and in that process, over a 10 to 15-year period, destroying the book industry as we know it, and then recreating it. Now, we don't see that happening in financial services at all. All these fintech startup and fintech banks that you're talking about, the neobanks in the UK, they appear to be revolutionizing the industry, but they haven't yet revolutionized the balance sheet. As investors, and in fact even the market, shouldn't part of the story be that we will not be profitable for the next 10 years, and we will scale, and we will hand the mortgage rate back to the customer? That's not happening in the traditional established markets. You seem to be succeeding in the startup markets, Myanmar, Indonesia, Vietnam, places like this where just deploying financial services is a first game. So I'm just wondering whether you have that in the back of your mind when you're taking your neobank concept to fintech bank, and to the next level. Are we arriving at a point of a Tesla for financial services?
First of all, when we came to Singapore and asked many bankers, not only inside Singapore but everywhere across Asia, are you afraid of fintechs? All of them answered, no. Especially in Singapore, Japan, South Korea, we are very rich, very successful banks. We are not afraid of them. It's just funny things for PR. Right now, recently I asked several of them, are you still not afraid of fintech? Yes, we are still not afraid, but we are afraid of Alipay. Because these guys became, for the last 2 years, big enough to buy any of them, and they will have still a lot of money for rainy day. And this is the answer. It's a transactional-based company, which is not trying to compete with others based on price competition. They founded new type of customers which completely unserved by traditional players. And it's really very important thing for bankers to understand that your current customers, they are not able to live forever. I mean, new generation of customer came to the market. They have never used traditional services before. They were born in universe with smartphones, with Apple Store, etc. And they do not want to use your services, not because your prices are higher or lower in comparison with others, but because they do not understand you. I mean, they cannot understand why I have to go somewhere for a physical branch or to call to call center. I mean, I'm using one of Singaporean bank as a customer. They have not so bad mobile bank, but when something happening with my current account, I have to call to call center. And it's nightmare. And I'm showing them several apps from startups which I have invested before, and I'm showing that I can chatting with my bank via this app, and if they need some docs, I can just take a picture and send them, and whole approvals go in digital, and it's about convenience. Finally, most of these startups like Amazon started with, not all of them, but many of them, trying to compete at the beginning with price competition, but after that, even when they're starting to increase their prices, customers will stay with them because of customer support.
So how many such stories do you have? Do you have any stories that shows that, I mean, you're making the argument right now, so but is anyone buying into it?
Well, for example, one of our portfolio company, Rocket Bank, it's a simple bank for CIS region. They're extremely successful, and they started as, we want to deliver free current account, blah, blah, blah. But finally they found that their customers prefer them not because of price. Their customers prefer them because it's very convenient. You even can send a joke or demotivator picture to your bank, and they will answer you. And when something will happen, everything you can solve any problem via this app. You do not need to go somewhere. And finally, they increase their prices. For several parameters, they became even more expensive than traditional players, but customers prefer them, and they are not providing loans. Loans still, it's the highest margin products for banks, but they are earning enough based on transactional business. And why, as I mentioned before, fintech, it's not about how to save your expenses. It's about how to attract new type of customers. And second one, about loan business and margin, which if you will decompose each bank, inside any bank, they have splitted departments for each product, and they're asking each department with each product to be profitable. They are not thinking in terms of, this is department of Snapchat generation, this is department for on-demand economy, this is department for digital companies, and this is life cycle of products for example, 5-7 years of relationships. And this bunch of products can be zero margin or unprofitable because they're providing us opportunity to attract customers and to understand them better. And these products, they are responsible to provide us margin. And all banks, they're still thinking about one customer buying one product, and these products have to be profitable since the beginning. It's wrong because, for example, like right now, everybody in the world of finance, especially in fintech investments, they're crazy about final success of Square with a Square Capital product. They showed for everybody that they're using MPOS acquiring these plastic dongles, which are providing you to accept payments via cards, just as customer acquisition channel. After that, after, for example, 6 months of relationships, they know so much data about your company, not only about your financial statement, because when you will apply for SME loan in any bank, they will never ask you how many customers do you have, how many of them are loyal, what about your management of your inventory, what about your loyalty programs, just where is your financial statements, that's all. But Square understands so well not only your balance sheet, but also how many customers, how many of them are loyal, what kind of products or services from your side they prefer most, how many employees do you have, who are they, etc. And finally, when after 6-9 months, Square providing loans for these customers.
But even that was slow, isn't it? Because Square was actually to use this phrase called Rails. I hate that phrase, but basically they were using the existing credit card platform, or the Rails, to acquire this data. And in China, they just went, the wallets just went way over that, okay? In fact, they went way over that so quickly that the rail providers came to them and said, how can we plug into the platform that you've created? And it wasn't a physical dongle, it was app to app, and it was social media. It just leapfrogged the way in which the transition in financial services is being articulated in the developed world. In a number of the countries that you operate, you can almost create those ecosystems today.
It's magical.
Yeah. So to tell the Square story, you can almost tell the Square story in 5 sentences less, because today you're not even dongle dependent anymore.
Sure. And I just provided an example of how you are able even to.
Yeah, so this whole thing, and these stories are being told continuously and so on. But as an astute investor and with a very short, investment window, the time frame. What's your time frame? Like 5 years when you go into an investment and you exit?
3-5 years.
3 to 5 years,
yeah.
Right? So
I'll exit strategy for 3-5 years.
So if even for 3 years, you've given yourself a very short time to be able to realize the fullest possible potential. So you can't be telling stories from the developed world where they're carrying their legacy with them and with the regulation, putting them in a cage, to say how wonderful all this is. You need to have your own religion, your own end goal, right? The nice thing is that PSD2 and open banking in the UK actually provides the language by which we want to we need to get to where we want to, and that's something that's really missing in a number of countries, especially Singapore.
In Asia.
In Asia in general, but definitely in Singapore, because Singapore's got a lot of the credibility, or rather the publicity of being an innovative country, but it doesn't have the language carrying it. So, and they refuse to have a language actually, because a lot of the control is still bank centric. So yes, we will become digital, but the banks will become digital, not finance will become digital, right? So they've hemmed themselves in that way. But yet in all of the new markets that you're going to, Myanmar and Vietnam and Indonesia, and eventually I'm sure even India in that regard, will be software driven, hardware agnostic, relationship centric. And then the product part, that's the part that I'm quite curious to know, how deep are you into the balance sheet of the players that you're working with? So if they acquire, 100,000 customers in 6 months, that's fantastic for some countries. That's great, but where's the profitability aspect of it? We are way past the era of the HSBC-owned direct banking initiative in the UK. It took 20 years. It's a beautifully stable system as long as nothing changes, and that won't survive anywhere else today. So I just want to drill you down into the balance sheet of the players that you're invested in. Movin, for example, the balance sheet, is plugged into whoever's using it now, right? The banks that have subscribed to the Movin model. So how many of the players that you invest? I mean, do you look for that? Do you look for we must succeed on the balance sheet front, or we must have a story to tell on the balance sheet front?
To be honest, our part of their journey belongs to, I mean, because we are early stage investor, we prefer to invest on A/B round stage. We are investing our attention and our money to test something. To be failed, it's also okay, because you can create something new without failed attempts. And finally, when buyers bought our companies, or talking right now about others, they are not buying balance sheets. They are buying, for example, when we sold one company, bank analyzed that we are spending to attract this customer $200, but they're spending 20. So we are buying marketing machine to attract customers twice faster and 10 times cheaper. How many millions we are spending for customer acquisition every year, and the amount of these expenses even higher than whole valuation of this bank. Second example, we are spending for marketing that we are very innovative bank tailored for new generation of customers, but we do not have any proofs that we are a real player. I mean, we really this kind of bank which we are trying to promote via advertising. And after that, they just compared the expenses for advertising campaigns with price of this bank. But this bank exists as products, as real proof of what you are talking about. And finally, this, oh, it's cheaper to buy this bank rather than to spend for advertising that we are doing this. And other companies, they are providing better understanding of their customers. And but as I mentioned before, right now situation changing very fast. Traditional banks, they are not main potential buyers. Alipay became one of the biggest investor and acquirer of fintechs. Telcos, internet giants like Google, Facebook, Amazon, they have more money than any bank. They are fast enough. They already tech equipped to be integrated with these players as fast as they can.
Right.
And why? I mean.
So they're going to attach the financial services component to a different story, a bigger story, right?
Exactly. They already have their customer base. They already even have high profit. The biggest challenge for all these guys, first of all, where we can find enough talents to create future products. We have talents to create current products, but who will create new things? And sometimes they're buying these companies just like acqui-hiring. Second one, how to differentiate between not me and this bank. They are not care about banks, but how to differentiate ourselves from, for example, Apple from Samsung. It was a very funny story. We participated in conversation when Samsung bought LoopPay, and to create finally Samsung Pay based on LoopPay. We decided not to invest because we analyzed their sales and thought, oh, come on, you have great team, great technology, but it will be so hard for you to organize sales of this technology. But when Samsung came to the board, they answered,
made it possible.
We are not care. We are able to sell anything. We have to compete with Apple in terms of quality of our smartphones. And these guys, they know how to do this. We really never care about their balance sheet. We have our own balance sheet. And they paid 5 times more than this company evaluated at that moment. Just forget about conversation regarding your round. We want to acquire whole company and let's do these things. And for them, it was very cheap. I mean, for us, it was, we do not want to participate. We want to, but we cannot because you are overvaluated. For us, it was overvaluated company. For them, it was very, very cheap company. This is, I mean, comparison with banking mindset, all bankers think about other banks. Internet company thinking about everything. Recently Jeff Bezos told that if you are not thinking that Amazon can compete with you in your industry, you already lose this game.
Yes. So valuations only mean something if you have a story to attach it to. And if your story is business as usual, then your valuation will be business as usual. If your story is something that you can carry with customers or an imagination, you can have a bank that deals only in autonomous cars because there's a whole ecosystem in there, right? So, and there's a financial aspect, little financial component that needs to be plugged in, and then it just takes a completely different valuation.
Or, for example, take as example WeWork. Nobody across banker think about WeWork as their competitor, but independent contractors became the biggest target audience in US right now during the last 5 years. Third of human resources of employees in US belongs to independent contractors. It means that they're working with Uber or Airbnb or Instacart or any other marketplaces. This named, I do not know, Gig Inc.
Yeah, the gig economy.
Yeah, became the biggest employer on the market during the last 5 years. Nobody care about them as banking customer. I mean, when they go into retail department of your bank, oh, you are a little bit bigger than typical retail customer, and you have also demand for SME products we are not able to provide because we are just a retail branch. You have to go to SME branch. When you are going to SME branch, come on, your company just you are and your business is not stable because you are working with marketplaces. We want to, and finally, but this is huge market. These companies growing very fast, and somebody who are working with them, not for them, but with them.
Yes.
They're growing very fast. WeWork attracted already, as I remember clear, about 200,000 companies to be the clients for co-working spaces. So co-working spaces can compete with any branch in terms of design, in terms of user experience. It's so cheap for WeWork to establish some banking table or banking corner in each co-working space. It will be immediately several dozen of countries which covered by this very fancy, very attractive company which is serving underserved but very fast growing target audience who will and how can compete with this possible WeWork bank.
Right.
Nobody between banker thinking about it.
Yeah.
Really, I think it is the biggest problem with this industry. They are thinking about that their competitor it's wrong.
Okay. So how's that influenced your thinking on valuations, your thinking on picking up the startups? Actually, now you're not looking for startups anymore. You're looking for patch solutions. And the patch solution might be something so specific that it doesn't look viable on its own, but when you plug it into a bigger story, you can see it. I mean, I'm sure that Samsung taught you a lesson, right? Because okay, good. So how does that? How do you think of valuations today? I mean, like when you look at something, how do you value it?
First of all, we are estimating real customer pain. I mean, if customers really want to be that somebody have to solve their problems and these problems really exist, then it's already value. If nobody or only few players trying to solve this, like for example right now with cryptocurrencies and blockchain, everybody prefer to talk about it, but if you will try to convert 5 million from crypto to fiat and to send it to DBS or CBC, they will close your account. so innovative, so fancy banks, they will close your account without any description why. This is the first point to understand some market gap or customer pain. Second one is about your team and your technology. How do you want to solve this situation? But really, especially in Asia, you do not need to create the best tech solution. Often, especially here in Asia, somebody who's sophisticated in terms of execution and distribution finally became leaders, not somebody who hired best engineers and programmers. Because finally, if we will take fintech from US or UK, it's really about online to online solution. But in Asia, you have to understand that you cannot split online and offline world. You have to connect them. Online, it's not about how to replace everything. Online, it's how to make currently existing processes or services better. And second one, to evaluate your team, your previous experience, your current status. After that, for example, for some industries like fintech even today became traditional in venture capitalist world. Fintech, it is very traditional business today because so many players, already many metrics, you already sold similar companies for others, so based on which KPIs potential buyers do this. But for example, like with blockchain, I see in the same situation like it happened with fintech 6-7 years ago. Nobody understands how to evaluate these companies. What is
the exit?
Exit you can suggest. It is one of your own internal metrics how to evaluate possible scenario. And but technology came to the market. You can understand that where, how, and when it can be implemented, and what kind of results you're waiting for. Second one, is it a real problem or not? Or maybe it is just new fancy thing to be added and that's all. Third one, big enough market. Right now, 2 days ago, Bitcoin became 10,000.
Yep, on my Bitcoin, yep. 1,000 is, 1,000 a few years ago, now it's $25,000. So it's like, yeah.
Yeah, and right now, valuation, I mean, more than 500 startups attracted more than 3.3 billion via ICOs, valuation of Bitcoin and Ether together about 200 billions together. It's very big market, completely underserved by traditional banks. They are not able to be connected with traditional.
So you need conceptually a different view. So are you moving into that space, crypto and blockchain?
Yeah, right now we are launching 2 very big activities in parallel. First of all, BB Fund, based on blockchain fund. It's our 3rd fund, focusing only on blockchain solutions. And we really want to make this fund based on blockchain. I mean,
but you have to have a religion. A lot of the blockchain initiatives are bank-centric again, and
no, I completely against this view. I mean, blockchain started from financial industry.
Yes.
But right now we see that bigger demand for blockchain implementation. Even I just met with the biggest insurance company from Japan. Belongs to insurance, health tech, logistic, government services.
So those are fine. I mean, those that exist not because see, that's the funny thing. The blockchain gives financial institutions a second chance of rehabilitating themselves because they missed the boat on the first round, which the first round is the Googles, Alipay, and the Facebooks of the world, which became so large that they can buy any innovation in financial services and plug in, and it's a much bigger story. And blockchain is very likely to create its own giants, and
Exactly.
those giants.
And it's not about only for financial services.
Yes, will not be financials. In fact, the trade finance community, for example, the trading blockchains, smart contracts that are being created by the ICCs of the world are so much their life. They only miss the financial component of it. That's the funny thing. That means trade finance, not so trade finance, but supply chain is being run by blockchain increasingly. So there's a lot of activity there. But my point being that when you look at financial blockchains, trade finance, payments, FX, they're all bank-centric, and banks are trying to create their own versions of it.
It is the reason why one of our main statement or goals of this fund, forget about blockchain for finance. So many industries really waiting for blockchain implementation, like I mentioned before, government services, public sector, healthcare, insurance, even fine art. Demand for implementation of blockchain there much higher. I mean, everybody prefer to talk today about blockchain for financial sphere just because of prices for blockchain in the sphere, but it's just peak of the hill. The biggest value belongs to other industries. And first of all, we want to invest in blockchain mostly outside of finance. Second one, we want to invest in infrastructure players because, okay, right now, is it bubble or not? It's really, we are not care. We are playing in long term. Even if this bubble will burst, if you will track how previous bubbles, infrastructure solutions, they're going down together with the market, but after that, their prices became, I mean, Amazon, Netflix, Google, all of these companies came from dot-com bubble. Nobody cares that they, I mean, this is the result of this bubble. Bubble attracted attention. Okay, many wrong players, they became bankrupt, but infrastructure giants became so big companies today. And the same with blockchain. Too much attention, too many wrong persons which came to the industry, but you have to care about 10 inside each 100 of persons we came to the market. They're right person, they talented enough, and they will create new Googles, etc. And we are investing in long term. We do not want to speculate with cryptocurrencies, tokens, to invest on pre-sale after 2-3 months to sell them with 2, 5, 10x. We want to invest into equity, maybe equity plus tokens, but to stay for 3-5 years with these companies, not to create fancy apps for end users, but to create some fundamental infrastructure solutions before. This is our approach. And when somebody asking us, but you cannot expect this one or that one or too high risk, but this is our job. I mean, you cannot earn enough if you will never be able to take a risk. And second one, with any new thing, to understand what will happen later, it's learning by doing. I mean, only testing by your own attempts, investments, common experiments, only after that you will win, not because you are richest guy in the room, but because you just tried it. You didn't afraid to try it. And last one, but it is our second very big initiative in terms of this blockchain crypto world. As I mentioned before, if you try to convert less than 50K, it's possible. If you will try, I mean, it's possible to send from crypto exchange to any traditional bank account because it's not so big amount of money. If you will try to convert between 50K and 500K, situation will be 50-50. But if you will try to convert more than 500K, especially if you just raised 40-80 million crypto dollar via ICO and you want to convert, for example, 5 million just to operate your business, your current account in OCBC, DBS, UOB, Barclay, in UK, PNC Bank, in US will be closed, frozen for 30 days, and after that closed. And we spent last 3 months. We met with different banks, small one, big one, tech advanced, not so tech advanced. Ask them why you do not want to work with them. Why you worked with them 6 months ago, and right now you are closing the accounts everywhere. Really, nobody wants to talk about this problem. Everybody prefers to talk about price for Bitcoin or how many billions together ICO-backed companies raised. They are not able to convert this money right now. This is the biggest problem. Nobody wants to talk about it. 2 weeks ago, I sat together with Tim Draper on Web Summit in Lisbon, and he agreed that too many millionaires after ICO came to the market, but when we are meeting together, they are not able to pay for their coffee. And when I asked these guys, why you do not want to work with them? First of all, they told that previously we really tried to work with them, but right now they are growing so fast. I mean, we are not able to hide them from regulatory opinion. It provides us conflict of interest, so we tried to do this, but in silence, via a hidden way. Right now, we cannot hide this risk. It is first reason why we do not want to take this risk. Second one, we hired so many people inside our bank. They used to work with traditional clients, traditional transactions, and when for some compliance lady go in some money,
yeah.
What is the source of your money? I just organized ICO. What you are doing, we are a blockchain company. And what is the source of money of your investors? They mined it via their miner farms.
And this is money that they suddenly call out from somewhere, nowhere, and then you want me to do a compliance test on that.
And even recently I met with Carlos, CEO of BBVA Group, one of the biggest financial groups in the world, and I think BBVA, the best
yes, of a bank that will be working with,
which is working with fintech, buying, investing, etc. And he thought most stupid way to re-educate or to change mindset of your employee. If it's really, and it seems like it's completely new type of clients, completely new type of risk, it's easier to establish new bank and to be focused only on this demand, to hire people only to work with them, to implement technologies only to work with them. And finally, we decided to, right now we are looking for a small bank in the US to buy. We want to, why it is have to be a small bank? Because we are not interested in the current business model. We want to clear up the business model to add as many new employees, to be focused only on what does it mean, blockchain, ICO, crypto, new employees. Third one, to implement new technologies, especially, for example, blockchain-based digital KYC and AML. And fourth one, to be extremely transparent for regulators, because right now you can find some, so sorry for my words, shitty banks from nowhere, which is trying to work with this crypto blockchain world, but their approach, not we are transparent and we really want to help good guys to survive and we want to split wrong guys from the market. It's just money laundering banks.
Right.
Nobody wants to go to regulator and explain. We want to be focused on that problem, on these clients. We understand them. We want to be 100% responsible what they're doing. We analyze them from different angles. Even if you are able to add some concerns or questions, it's really great tasks for us to what we have to do next. And we want to buy a bank. We already received about 20 requests to sell between 2.5 and 30 million. I mean, many banks, too many banks in US, and it's not so hard to find the bank, but it's harder to find the right bank and to explain for regulator who you are, what do you want to do, how you will track these clients, that you really do not want to create the biggest money laundering machine, but you want to, because this industry right now in the gray area, everybody prefers to talk about is it bubble or not, but the biggest problem will be if we will not help this gray area to become white, all of them will go to the black market. And what they will do there, how we will find them there, nobody knows. And it will influence not only for financial situation, it will influence for everything, for all other black industries which will be linked.
You create a monster that you cannot retract from.
Yeah, and our approach isn't about we want to accept whole blockchain guys, whole crypto guys. We want to help right guys if they were not equipped enough before to do some homework.
Yeah. The funny thing about the crypto guys, by the way, the ones that I'm meeting, it's quite strange, quite interesting, is that they don't help themselves to create credibility. Mainly because they're all entrepreneurs and they're all very soft on the governance side, on the compliance side. It's not their strength. And the reason they are in that business is because they're entrepreneurs. And I find this very interesting. And then it becomes a self-fulfilling prophecy that the regulators call them charlatans, and then they behave like charlatans, and then therefore they're charlatans, and therefore they will not be part of the mainstream. So it becomes a vicious cycle in that way. And the industry is growing so quickly that it's actually reinforcing prejudices rather than making it lighter. So it'll be.
I 100% agree. You are right. All these crypto guys, they also doing some wrong stuff, because when regulators not punishing them but just asking them what you're doing there, they immediately became so nervous. They're trying to punish us or to limitate us in terms of our new wonderful ideas and better world. But come on, it is just, it's normal situation. They're asking you some questions. You have to answer. You have to educate them. It's a win-win situation. Yeah. They are not against you. So, they just do not understand what you are doing, but it's normal.
So Slava, the thing that I'm going back to in order to understand how this thing is going to play out, I'm going back to the origins of Christianity and the Roman Empire, right? And the funny thing is, the funny thing that made me ask this question is that, why was it that despite the Roman Empire, or at least the Eastern Roman Empire, was very, very well organized, it was very structured and so on, people pay taxes and they have stable communities, they have peace and all that, and yet there were thousands of people going and hiding themselves in the caves and so on, just to practice this thing called Christianity in the early days, right? And until Constantinople became a Christian, and even he became a Christian because suddenly he found himself in a palace surrounded by Christians, secret Christians, and he couldn't, he had to buy into the story in a sense. But and I can imagine Roman guards and Roman judges hauling these Christians out of the caves and then saying, you dishonest people, you're scary, you hide and you practice this strange religion and so on, and yet they just kept doing it, and they kept doing it for two reasons. One is that for the first time in human society, tradition was being created from the ground up rather than from the top down. It wasn't for 2,000 years before that. It was easy for one general to go out and conquer entire, spaces, countries. Julius Caesar, and then
half of the world.
Half of the world, right up to the borders of India and so on. And suddenly there's a movement from the ground up. And this is a movement from the ground up which wasn't localized in any one place, which was easy to quell the suppression. So when Christianity was a Palestinian religion, it's easy to send the soldiers out there and then and put the guy on the cross. But once it became a borderless idea and it was from the ground up, and I can just imagine how criminal the early Christians looked. Today they're highly respectable, but at that time the Roman Empire would look at them and say, you terrible people, you collect money, among yourselves.
You're self-organized.
And you're so organized and so on. And the same thing with the Falun Gong in China today. So, and there's something to be said about movements that are a response from the ground up. That did not exist before or needed to exist because the up-down aspect is losing its credibility or whatever, or needs to be checked or something like that, in a sense. This is a fascinating conversation I'm having with you, Slava. I mean, you are one of the world's leading credible investor in this changing evolution of financial services, and the decisions that you are making now. I mean, and we are ending this conversation now with crypto and with blockchain that you're looking at, and the mechanisms by which we need to think about valuation are some of the tools of the trade that will continue to evolve. And I would love to continue this conversation with you 1 year from now, and then another year from now, and see how you're taking it. And the size of your funds are very interesting. It's in no way descriptive of the size of the potential of the industry. And one other maybe just one last question before we go. Do you think that software will discipline the industry? Because a lot of what is called innovation is actually driven by the fact that the traditional bank is so badly organized, technologically so hardwired into something that's completely unworkable for the world today. And a lot of the applications that are being created as patch solutions to an existing infrastructure. Now, as that infrastructure moves from mainframe to servers to cloud and
bank as a service,
bank as a service, right? So and then it becomes agnostic, and the institution becomes completely irrelevant, and you're able to flow a lot more. But that whole cloud world also needs to be organized, and there you'll find a whole new discipline where you'll find a few infrastructure players who will dominate. You will find a whole lot of applications, or I call them patch solutions, which do not necessarily need funding it's not about funding, or it's not about institutionalizing in order to be an investable idea. It can be someone working at home and coming up with something brilliant, and it works. And on the back of it is the real validator is that the customer is willing to hand data over. The customer is willing to share his data to that community, and then that infrastructure. The liquidity here is not money; it's actually
it's data.
Data, right?
Or
it's
identities,
content, and lifestyle and stuff like that. So like my last question to you is that, do you see a technology trend where the technology is going to discipline the industry?
I have two answers, if it's possible. First of all, when we are talking about that software replacing humans, my view is very pragmatic. Everything that can be replaced by technologies, artificial intelligence, bots, neural networks, etc., it have to be done, but it's not against humans. Vice versa, it's providing for each person to be focused only on added value. I mean, this is the biggest question right now for whole people around the world. If every stupid work can be replaced by technologies, what's really you are trying to do? I mean, what is your main value? And finally, I think that it's the right question, And if you are really doing some useful stuff, because you're passionate, because you are smart enough, you will have so much time not to spend your attention for some very simple processes which have to be replaced by technologies. But I think that the biggest opportunity of this shift belongs to increase final value from humans, not to replace them. To save their time, to save their energy, to be focused only on main things. Second one about organization. I think that with previous technology shift, which happened right after dot-com bubble, and it's good. I mean, bubble is always good. Even tulip money still right now. Holland is the leader in terms of tulip economy.
Yeah, exactly.
Is it good or bad for them?
Yes.
They still the leader. About 500,000 employees employed in tulip industry in Holland, and nobody.
So regardless of the bubble, there's a residual value which goes on forever and ever.
In terms of which periods you are trying to evaluate these bubbles, is it good or bad? In the long term, it's very good.
It creates something.
Yeah,
all bubbles create a residual value.
Yeah,
very good point.
Yeah, and but this new shift, in comparison with previous shift, more self-organized and decentralized, and very, as you mentioned, regarding personal data, security of this data, trust for each other. I think that because right now so many people are afraid that maybe Apple, Facebook, Google, they're better than traditional players, but still it's not monopoly, it's a oligopoly of few players. Maybe today they are managed by good person, but later it can be wrong person, what we will do later. But blockchain implementing opportunity to create really decentralized but very trust oriented. Trust, it is the main coin in this industry, not money, not assets, but just what I know about others, other processes, other people, other assets. Can I trust it, this information, and only after that how to manage it. But it's not about how to tokenize everything. That's all. It's really more about how to know about something and trust it. So I think regarding organization of this structure, it will be more centralized and values oriented, human values oriented.
Slava, we must continue this conversation. Thank you very much for the time.
Great pleasure.